Welcome back to BullionIQ. If you are new here, this is the channel where we talk about finance, crypto, and digital assets from a long-term, data-driven perspective, not hype, not emotions, and not short-term noise. My goal on this channel is very simple: to help you understand what is actually happening behind the scenes so you can make smarter decisions in this market. Today, I want to walk you through some extremely important developments happening right now on the XRP ledger, and more importantly, explain why a lot of people are focusing on the wrong things while missing what really matters. Before we go deeper, if you are someone who follows Ripple XRP and the future of blockchain utility in global finance, make sure you engage with this video. Drop an X in the comments, hit the like button, and let the algorithm know that this type of real analysis is what you want more of. This channel grows when serious investors and long-term thinkers show up, and that helps all of us. Now, let me address something that has been weighing on the entire crypto market, especially the XRP community. Sentiment right now is weak. There is no point denying it. The fear and greed index has been sitting in fear for a long time, and after the way 2025 closed, a lot of people felt disappointed, frustrated, and honestly defeated. Many investors were expecting major regulatory clarity by now, especially the Clarity Act, and when it did not arrive on the timeline people hoped for, that disappointment turned into fear, doubt, and frustration. But this is where perspective becomes very important. When markets feel heavy, when sentiment is poor, that is usually when people stop thinking clearly. They start tying price action to news headlines and forget how markets have actually moved in the past. This is especially true for XRP. Many people are acting like XRP cannot make a major move unless the Clarity Act is passed. That idea sounds logical on the surface, but when you actually look at history, it completely falls apart. XRP has made its largest, most explosive parabolic moves in the past without regulatory clarity. We did not have the Clarity Act during those runs. We did not have perfect regulation. We did not have friendly headlines. Yet XRP still moved aggressively when conditions aligned. That tells us something very important. Regulatory clarity is not the engine that drives XRP price. It is an accelerator. It is the cherry on top, not the foundation. Do not misunderstand me. I am extremely bullish on the Clarity Act and on proper regulation for the entire crypto industry. When it comes, it will benefit XRP and the broader market massively. But XRP does not need it to move. Utility, liquidity, adoption, and on-chain activity are what matter first. Regulation simply removes friction once those forces are already in motion. And this brings us to what is happening right now on the XRP ledger. We are seeing real measurable activity that tells a much more important story than price candles on a daily chart. Recently, 19 million RLUSD was minted on the RLUSD treasury. Shortly after that, another 39 million RLUSD was minted on XRPL. This is not random. This is not noise. This is Ripple actively expanding stablecoin liquidity on its own network. For those of you who are newer to this ecosystem, RLUSD is Ripple's stablecoin. Its purpose is not speculation. Its purpose is utility. As RLUSD is used on the XRP ledger, it drives transaction volume, on-chain activity, and network usage. That activity directly strengthens the role of XRP as the native asset of the network. More transactions, more liquidity, and more real use cases mean more demand for XRP in the background, even if that demand is not immediately visible on price charts. This is how real adoption starts. It does not begin with retail excitement. It begins with infrastructure quietly being built and used. And while most people are distracted by short-term price moves of 5 or 7%, the real story is happening underneath the surface. At the same time, we are also seeing supply dynamics tighten. 500 million XRP has been locked up for the next 3 years in a single instance. Some critics will dismiss this and say it does not matter. They will claim the supply is still large. But this mindset misses the bigger picture. This is not about one lockup. This is about a pattern forming. We are seeing XRP treasury companies enter the market. We are seeing growing interest in XRP-based financial products. We are seeing strong demand for XRP ETFs. Institutions are not approaching XRP because it is trendy or because it sounds exciting. They are approaching it because of its utility, its liquidity advantages, and its role in real financial infrastructure. When institutional demand meets long-term retail holders who are not selling, supply pressure builds quietly. Many long-term XRP holders are not traders, they are accumulators. They add to their positions over time. Even when they profit in other cryptocurrencies, they rotate those gains back into XRP. This behavior matters more than most people realize. Looking ahead, yield products and passive income opportunities built on XRP are going to change the way people think about holding this asset. When you can earn yield without selling your principal, the incentive to exit disappears. That creates a very powerful supply squeeze over time. This is why, despite negative sentiment, despite fear, and despite impatience, the long-term outlook for XRP remains strong. But more than anything, what this market needs right now is unity. Fear divides people. Frustration isolates people. Strong communities survive long markets by lifting each other up, sharing information, and staying focused on fundamentals instead of emotions. Let's take a closer look at what the XRPL activity really means, because numbers alone don't tell the full story. The recent RLUSD minting is far more significant than most people realize. When 19 million RLUSD, followed by 39 million more, gets added to the XRPL, it's not just a stablecoin issuance. It's a signal that Ripple is actively expanding its transactional ecosystem. Think about it like a highway being built. The more lanes, the more cars can move efficiently. And in this case, the cars are financial transactions moving on-chain. The more transaction volume there is, the more utility the XRP token itself gains. This is one of the reasons why XRP's network value often grows, even if retail traders are unsure or hesitant. RLUSD isn't a gimmick. Its purpose is functional, and that's what sets XRP apart from many other altcoins. Stablecoins exist in almost every major ecosystem, but Ripple's approach integrates it directly with XRP in a way that encourages adoption and usage of the native token. Every RLUSD transaction pushes XRP into circulation indirectly. It's a network effect that quietly strengthens demand, and it's a type of growth most people don't notice because it doesn't immediately reflect in price charts. Long-term holders should understand that adoption metrics like these are often stronger predictors of massive upward moves than short-term hype or speculation. Next, consider the 500 million XRP that's now locked for the next 3 years. On the surface, it might seem small compared to total supply, but context is everything. XRP has a very large treasury, and Ripple strategically locks XRP to manage liquidity over time. Every lockup reduces the immediate circulating supply and creates scarcity, which can amplify price moves when demand spikes. Institutional investors are watching this carefully. They are not reacting emotionally. They are looking at supply, adoption, and real utility. That's why interest in XRP ETFs is increasing. Institutions do not buy coins based on Twitter hype. They buy assets that have demonstrable utility and network adoption. This pattern of demand, combined with controlled supply, is exactly what can trigger the next major parabolic move for XRP. Another factor that is often overlooked is how retail holders influence this ecosystem. Many long-term holders are quietly accumulating. They are not trading every day. They don't panic at small price drops. Instead, they reinvest profits from other crypto gains into XRP, slowly building their positions. This behavior creates a type of steady demand floor. Even if short-term traders sell or panic, the long-term holders act as a natural buffer, supporting the network and absorbing supply. Combine that with institutional inflows, and you have a market that is structurally stronger than most people realize. And then there's the passive income angle, which is huge. XRP yield products are coming, and when implemented correctly, they will allow holders to earn consistent returns without selling their XRP. This changes the psychology of holding. Once people can generate yield from their existing positions, they don't need to sell for cash flow. That means more XRP stays locked in wallets, fewer tokens are circulating, and demand continues to rise quietly over time. It's a compounding effect. If you are serious about holding XRP long-term, this is one of the most underrated factors that will drive future growth. Let's also talk about the broader market sentiment, because this is where psychology meets strategy. The fear and greed index has been pointing towards fear for a long time, and this naturally creates doubt among retail investors. Many are fixated on the Clarity Act or regulatory announcements, thinking that XRP can't move without them. The reality is that XRP has historically moved parabolically without regulatory clarity. Regulation is important, but it is a catalyst, not a prerequisite. The underlying infrastructure, adoption, and demand dynamics are what really drive explosive moves. Understanding this distinction is critical for anyone looking to navigate this market intelligently. At the same time, community unity cannot be ignored. Crypto markets are often shaped by sentiment, not just numbers. When communities rally, share accurate information, and help each other stay informed, it reduces panic selling and encourages long-term accumulation. That is why channels like BullionIQ exist, to provide clarity in the chaos and to focus on the data and trends that actually matter. Right now, understanding the combination of on-chain activity, lockups, institutional demand, and retail behavior is far more important than obsessing over short-term price fluctuations. So, when you look at the bigger picture, the XRPL is doing exactly what it was designed to do, driving real utility, adoption, and transaction volume. Every new stablecoin minted, every XRP locked, every ETF demand announcement, and every yield product being developed is another layer reinforcing the ecosystem. For long-term holders and serious investors, these are the signals to pay attention to because they create the foundation for the next big move. And unlike the hype-driven cycles of other cryptocurrencies, this growth is measurable, predictable, and tied to real-world financial adoption. Finally, this is the mindset that separates successful investors from reactive traders. It's not about chasing 5% or 10% moves every week. It's about understanding the mechanisms that will produce 100%, 200%, or even 500% moves over time. XRP's ecosystem is quietly setting itself up for precisely that kind of long-term growth. And for those of us who focus on fundamentals, who understand the infrastructure, the supply-demand dynamics, and the adoption trends, this is extremely bullish. For example, when we see millions of RLUSD minted or hundreds of millions of XRP locked, that is not just activity. It is a reflection of real-world demand and network utility. Each of these transactions tells us something about who is entering the ecosystem, how XRP is being used, and what the likely future demand will look like. For instance, when a large XRP lockup occurs, it's not just about scarcity, it's about confidence. Institutions and large holders are signaling that they expect XRP to appreciate over time and are willing to hold through volatility. That is a very bullish signal because these holders do not act impulsively. Institutional signals are just as important, if not more. When ETFs, treasury companies, or financial institutions start showing interest in XRP, they are not looking for short-term gains. They are evaluating XRP's utility, liquidity, and risk profile. These are serious investors who conduct months of research before moving significant capital. Their actions provide a level of validation that retail sentiment alone cannot achieve. For example, an ETF demand spike tells us that a substantial pool of capital may soon flow into XRP, creating both a demand floor and potential upward momentum. For a retail investor, understanding this mechanism is critical. Institutions often move the market before price charts reflect it. Another metric we need to pay attention to is transaction volume and adoption trends on XRPL. The more transactions occurring on-chain, the more XRP is being used for its intended purpose, rather than just speculation. RLUSD is a stablecoin designed to drive transaction volume, and every time it is minted and utilized, it strengthens XRP's position as a utility token. This is why adoption metrics are sometimes more telling than price action. If you look only at the price chart, it can feel stagnant, but on-chain activity may be quietly building the foundation for a massive future move. Understanding this distinction is what separates experienced crypto investors from casual traders. Now, let's talk about market psychology. A lot of XRP holders focus on headlines, price swings, or regulatory news, thinking that these factors alone drive the market. But in reality, XRP's price is influenced more by adoption, supply-demand mechanics, and institutional behavior. Retail panic can create short-term dips, but when you combine large-scale adoption, lockups, and institutional inflows, the overall trend remains bullish. The market does not reward fear. It rewards patience and understanding of the underlying fundamentals. This is why long-term holders often outperform traders. They understand the ecosystem beyond the hype. One more important factor is yield products and passive income opportunities being introduced for XRP holders. These are game changers for long-term accumulation. Imagine earning a steady income without selling your XRP. That changes how investors behave. Instead of reacting to short-term price drops or hype, holders are incentivized to stay invested and allow compounding returns to grow their position. This behavior naturally reduces circulating supply, strengthens demand, and makes the market more resilient. Over time, these structural advantages can be the difference between a 20% move and a 200% parabolic run. It's also essential to understand the role of sentiment and community. Markets do not operate in a vacuum. When sentiment is weak, fear spreads and people make poor decisions. But when communities stay informed and united, sharing accurate data and insights, panic is minimized and confidence grows. BullionIQ exists to provide clarity, not noise. When we focus on the metrics that actually matter, lockups, on-chain transactions, institutional demand, and adoption, we remove emotion from the equation and base decisions on real evidence. That is the core difference between speculative trading and intelligent investing. Additionally, consider historical context. XRP has gone through multiple cycles where sentiment was negative, regulatory clarity was missing, and the market was fearful. Yet, each time when adoption and on-chain activity increased, XRP produced explosive moves. This pattern tells us something crucial. Parabolic growth does not require perfect conditions or positive news coverage. It requires structural readiness. Right now, XRPL is building that readiness quietly. Institutional interest, transaction volume, lockups, and utility-focused activity are all aligning. This is a clear signal that XRP is positioned for another significant move when the market conditions are right. Finally, we must tie all this together into a practical perspective for investors. If you are holding XRP long-term, these metrics provide confidence that your position is backed by real-world utility and adoption, not speculation. If you are a retail investor or someone new to the ecosystem, understanding these fundamentals helps you make smarter accumulation decisions. You are no longer reacting to headlines or short-term market swings. You are observing patterns, metrics, and institutional behavior that historically lead to parabolic growth. This mindset is what separates successful investors from those who chase every daily pump or panic during dips. This is where things get interesting because price is not random. It is the result of supply, demand, and market psychology interacting over time. When you combine large-scale lockups, stablecoin minting like RLUSD, rising adoption on XRPL, and institutional inflows, the conditions are being set for a significant upward move. Historically, XRP has produced massive parabolic moves when these factors align, even without perfect market conditions or regulatory clarity. That's why understanding the fundamentals is more important than watching daily price charts or news headlines. For long-term holders, strategic accumulation is key. You don't need to time the market perfectly. The goal is to gradually increase your position as confidence in the ecosystem grows. Many retail investors make the mistake of buying heavily after hype peaks and selling in fear when markets dip. Instead, if you focus on the fundamentals, like XRPL adoption, stablecoin activity, lockups, and institutional interest, you can accumulate in a much smarter, risk-adjusted way. Think of it as stacking bricks. Each accumulation adds to your foundation, and over time it compounds into a much stronger position. This also ties into portfolio planning. XRP should not be treated as a speculative gamble. When you understand the network dynamics, you can plan for a long-term investment horizon. That means sizing your position appropriately, knowing how much you are willing to hold, and understanding how passive income opportunities can supplement your strategy. Yield products are becoming increasingly relevant because they allow holders to earn returns without selling, which reinforces long-term commitment and reduces the pressure to exit during temporary dips. Essentially, it allows you to grow your position without relying on short-term price spikes. Another aspect to consider is the institutional influence. When ETFs or treasury companies enter the market, they often have specific accumulation targets. Unlike retail investors, these institutions have the ability to move markets by buying in large quantities over time. They are strategic, patient, and data-driven. For the average retail investor, understanding this dynamic is crucial. Large institutions don't panic sell, they accumulate methodically. Knowing this gives you insight into how price may behave over the next months or years, and why holding alongside them can be a very profitable strategy. Let's also talk about market sentiment cycles. The crypto space moves in waves of fear and greed. During fear cycles, retail panic dominates, and short-term traders exit positions, often at a loss. During greed cycles, everyone jumps in after price has already surged. The challenge is always positioning yourself before these swings, not after. By focusing on XRP's structural growth, network adoption, RLUSD utilization, and long-term lockups, you are essentially riding the fundamental wave that eventually drives the parabolic price move. You are not gambling on emotions. You are investing based on measurable signals. Timing is another critical factor. Even though fundamentals are strong, markets do not move in a straight line. Expect corrections, sideways consolidation, and occasional dips. This is normal. In fact, these dips provide additional opportunities to accumulate for those with a long-term vision. Patience is a huge advantage in crypto. Many investors give up too early because they are fixated on daily price changes. The reality is that XRP's next major move will likely be a result of cumulative adoption, institutional entry, and supply constraints, all of which take time to develop. Practical steps for accumulation and portfolio planning are simple but powerful. First, define your target position size based on your risk tolerance. Second, break that position into multiple purchases rather than buying all at once. Third, monitor on-chain metrics like RLUSD activity, XRP lockups, and institutional inflows. Fourth, stay updated on upcoming yield products or passive income mechanisms that allow you to compound holdings. And finally, engage with informed communities that focus on fundamentals, like BullionIQ, to stay rational during market swings. It's also worth noting that XRP is positioning itself differently from most other altcoins. Many cryptocurrencies rely on hype, speculation, or trending news for short-term price spikes. XRP, on the other hand, is building a real financial ecosystem. Stablecoins, on-chain transaction volume, treasury management, and institutional adoption all create a robust foundation. When the market recognizes this cumulative effect, the resulting price move is not incremental. It is exponential. Understanding this distinction is critical for anyone who wants to approach XRP strategically rather than emotionally. Finally, the takeaway for viewers is clear. XRP is not about chasing the next pump or worrying about missed headlines. It's about understanding real adoption, supply-demand mechanics, and institutional participation. By planning your accumulation, leveraging yield opportunities, and focusing on long-term fundamentals, you put yourself in a position to benefit from the next parabolic move. Remember, smart investing is not about predicting every short-term movement. It's about positioning yourself where structural growth is already in motion, and XRP is doing exactly that right now. XRP is not just another cryptocurrency. It's an ecosystem built for real-world utility. From the recent RLUSD minting to massive XRP lockups, from rising institutional interest to upcoming yield products, all these factors are aligning to create a foundation for potential explosive growth. What makes this especially important is that these moves are not based on hype, speculation, or short-term price swings. They are based on adoption, network activity, and strategic investor behavior. That is why understanding the fundamentals is far more important than reacting to every news headline. The actionable insight here is simple but powerful. If you are serious about holding XRP or building a long-term crypto portfolio, focus on the metrics that actually matter. Watch on-chain activity like RLUSD minting and transaction volume, track XRP lockups and institutional demand, and pay attention to new yield opportunities. These are the signals that will shape the next major parabolic move. By positioning yourself around these fundamentals, you reduce risk, increase confidence, and set yourself up for long-term success. Community also plays a huge role in navigating markets like XRP. During periods of fear or uncertainty, many investors feel isolated, frustrated, or unsure about what to do. That is natural, but it can be mitigated when people come together to share insights, correct misinformation, and support each other in making rational decisions. On BullionIQ, we aim to do exactly that: provide clarity, share data-driven insights, and help long-term investors focus on what really matters. Engaging with communities that prioritize fundamentals over hype can make a huge difference in maintaining a disciplined, long-term approach. Let's also touch on mindset. The crypto market is full of distractions, hype, FUD, and fear-driven cycles, but if you can maintain a long-term perspective, focus on adoption, and understand structural growth, you are already ahead of most market participants. Remember, XRP has historically made massive parabolic moves without perfect conditions or regulatory clarity. The current ecosystem, with on-chain activity, lockups, and institutional demand, is setting the stage for another potential move. Staying informed and patient will allow you to capture this opportunity without getting caught in emotional decision-making. Now, for those of you thinking about your next steps, here's a practical approach. First, evaluate your current XRP holdings and determine your ideal long-term position. Second, use dips in the market to strategically accumulate while keeping your risk tolerance in mind. Third, track developments in the XRPL ecosystem like RLUSD utilization, network activity, and upcoming yield products. Fourth, stay connected to informed communities to verify data and avoid hype-driven mistakes. By following this framework, you are not gambling. You are investing with intelligence, patience, and foresight. Finally, let's talk about the bigger picture. XRP is more than a token. It's a bridge between traditional finance and the digital asset world. Its utility, adoption, and structural growth are quietly building momentum while the market focuses on fear and short-term fluctuations. If you understand this, if you pay attention to the metrics rather than the headlines, you are positioning yourself to benefit from the long-term growth potential of XRP. And that is why channels like BullionIQ exist, to provide clarity, perspective, and actionable insights so that investors can make informed, confident decisions. Before we close, I want to hear from you. What are your thoughts on XRP right now? Are you focusing on accumulation, on-chain metrics, or yield opportunities? Drop your comments below. Your engagement not only helps the channel grow, but also helps us all learn from each other and stay informed. And as always, thank you for your time, your support, and your commitment to understanding crypto with clarity. To summarize in one final thought, XRP is quietly preparing for a future where adoption, utility, and institutional demand drive its next major move. Fear and hype will come and go, but fundamentals last. Stay informed, stay patient, and focus on the metrics that truly matter. That is how smart investors navigate crypto markets, and that is how we position ourselves to capture the next parabolic move in XRP.